Welcome back to the second segment of the Tax Time Show. In this episode, Mr. AJ Kumar, CPA and MBA with Science CPA Services, has been giving us information that we need to know about budgeting and financing. In the first segment, he gave us an overview why budgeting and financing is so important, and there are other reasons also, even for small businesses. As we pause right before the break, you gave one reason, but you said there are other reasons as well.
Sure, Sanjeev ji. So before the break, we were talking about the corrective action. You can compare your actuals with the budget and make necessary changes to your plan. So you are heading in the right direction. It's not going unknowingly in the wrong direction for you. Then the other benefits are if you are going for financing. Let's say if you want a bank loan, bank wants to see where is your business heading. Can you afford to pay this loan back? From that perspective, all banks will ask for 3 to 5 years of financial projections along with the business plan. If you have a budget, if you have a forecast in place, it's very easy for you to submit these documents to the bank. The other benefits are if you are looking to find a partner, the partner wants to know how much money has to be brought in, what's the ROI going to be on this investment. So from a partner's perspective, you have to show them these financial projections, financial budget. Further, you also need to know what's my working capital need. I'm growing 20% every year, but soon enough, I'll need another $1 million in 2 years. So I better start preparing for a line of credit, business loan now. So you need to forecast, not just how much money I'm going to make, how much money I'll need. You need to forecast the cash flow. How much cash flow I'll need, when I'll need this cash flow, and how do I get this cash flow. There are several benefits of budgeting and forecasting, Sanjeev ji.
Okay. What if someone doesn't have a budget?
Well, great question. Let's take an example, Sanjeev ji.
It could happen. I mean,
it does.
I'm sure there must be some businesses who don't prepare these things.
And I see it every day. A lot of small businesses don't take enough time on the planning side of it.
Yes.
Let's take an example, and it's a real example. You have a grocery store. A grocery store typically gets the material, the food, the grocery on 30, 45 or 60 days on billing time. They give you the grocery, you don't have to pay them for 60 days. But when the grocery store sells this grocery out, the money comes in immediately, typically either cash or credit card. So all these grocery stores, they have inventory worth $500,000, more than $500,000. This $500,000 doesn't have to be paid for 2 months. As soon as they make the sale, they start seeing money, couple of $100,000 coming in. So the typical grocery store owner, they will feel they're cash rich. They don't know how much money has to be paid out.
But it's only temporary.
That's the point here. They feel they're cash rich, the inventory keeps increasing, their accounts payable keeps increasing. They keep taking money out of the business even if they are not making money.
Oh, wow.
Just because they don't realize
Yes.
that the accounts payable keeps increasing. They don't have proper books. They're not budgeting. They're not forecasting.
Right.
They say, oh, how is the grocery store? It's doing okay. I keep taking $20,000 every month, $5,000 a week. Not realizing by the end of the year, they have taken out almost $250,000 from the business, and the business did not make $250,000.
And they may end up putting some money into it.
They find themselves in a situation when the creditors are pressing them, the accounts payable is so high that the business just folds. It can't survive.
Okay, so that's a good example for someone who doesn't have a budget.
Right.
My question to you is that how often you have seen budgeting and forecasting can go really wrong?
Well, it all depends on how frequently you are doing it. If the budgeting and forecasting is not your will,
but if you inflate it so much, if you think, if you think beyond the boundaries and say, oh yeah, I'm going to get this many orders and I'm going to bring in this much revenue and let's put in the forecast and so on and so forth, and then they go out and plan on anything and everything, starting with buying goods or hiring people and whatnot. What is the best tip that you can give for budgeting and forecasting not to go wrong?
Well, for the budgeting and forecasting, you need to be doing it more frequently than not. It's not a will. It's not something that you do once and forget about it. It's one of those things that you put on paper, put in place, and then keep checking it every month, every quarter, every so often, depending on business to business. It could be as frequently as weekly. You need to see the plan that you had, the dream that you had, is it materializing for you? how are the actuals coming out, and you have to keep fine tuning your path to success, your budget, your forecast as you see the actuals coming in.
Once you prepare budget and forecasting on your own, let's say business owner thinks and knows the business and can do it, who should he go to have that reviewed?
Well, the peer reviews there. You should have your CPA review it. We review a lot of budgets and forecasts ourselves for
Oh,
a
you
lot
do
of
that.
clients.
Okay.
It's commonly done. In many cases, we help the client prepare the budget and the forecast because we have the history. So we sit with the client. It's sort of a CFO type of role, virtual CFO service. We will sit with you. We'll see how do you think your business is going to grow? Why do you think the business is going to grow? That we will ask the hard question. As a business owner, you always want to be, not that that is possible, you always want to be growing as fast as practically possible. Sometimes it's not even practical. So we will ask the client, will ask the business owner the hard question. You have not grown 20% in last 5 years. What makes you think you will grow 20% this year? What are you going to do about it? What's the plan? How are you going to achieve it? And then we put all those parameters, the assumptions on paper. And then we'll come back every month, every 3 months to see if those assumptions are real or not.
Okay.
And then we'll fine tune our path to success.
Okay, that's a good point. Obviously, because somebody needs to review it and somebody really needs to have it controlled and
Absolutely.
whatnot. All right, it's time for us to break. But when we come back, I want you to tell all of us that let's say your financials, businesses financials, they are certified once a year because when you file your tax return, and certified financials is what the financial institutions such as banks would want to see if you are seeking a loan from the bank. But who can certify budgeting and financing report, and how thoroughly someone can review it? We're going to talk about that after we come back from these messages. Once again, viewers, any question that you have, please send us an email, texttime@tvasiausa.com. We'll see you on the other side of the messages.